What is going on, guys? Welcome back to the channel. Let's talk about a little bit more in depth, maybe something a little bit more different on BBBY while it's the weekend. I figured why not? This is Nugent. Nugent doesn't like the camera as much. So I figured we'd go over some info. I don't know what I got to do to be your DFV of this play. We'll see. So anyway, wanted to talk about BBBY. As always, I'm not a financial advisor. This is not financial advice. It's just for entertainment purposes only, so let's be entertained. All right, so I was just reading through some of the articles and kind of picking out some highlights from either what the company has said through their earnings or some of the news articles, what they're looking at. And Bed Bath & Beyond says that it plans to be break-even cash flow by the end of Q4. So I like to hear that. We want to see how they turn around, how they make all of this work out and go in the right direction for them. What exactly are they going to do? Now, like I said before, the ladies seem to be on the same page. They seem to be very optimistic and they seem to be driven and they want to make this turnaround. So we know that they have plans to close approximately 150 of the stores total. We're seeing numbers between 150 and 200. I don't know exactly what the final number is going to be. We'll just see how that plays out in the end. But they do anticipate that approximately 50 of those stores will be closed by February of 2023. So that gives us a little bit of something to work with, right? Where we know that not all of those stores are going to be closed, but probably somewhere between a third and a quarter of them will be closed by February 2023. So we're looking forward to their earnings whenever that comes out and seeing how this is playing out as far as closing of the stores, getting rid of some of that overhead that comes along with I was looking at the stores and some of them I know are probably really high dollar rent areas. So it's going to be kind of a double-edged sword. They're getting rid of some high cost, high rent areas that, are really probably bleeding them out of money. But also those are the communities where the people have a lot of money and maybe they're still going in and buying from Bed Bath & Beyond. So how is it going to play out? And that's why I think, and I've been saying, I didn't think this past earnings was going to be the one. We're really looking to the future with this play. We're looking to see what happens after some of this goes into effect and how it starts affecting the books. So we're looking at February 2023 is whenever my interest is really going to start being in tune with what's going on with price direction and what the shorts are doing. In the meantime, we're probably going to have a lot of that volatility still, which is fine. You got your gamma runs, you'll have your setbacks, we'll have the give and take. Now, the quarter two sales were 1.44 billion, and they estimated that about a 28% decline from the past year. And with the closing of the stores, they're anticipating 20% less sales. So whenever they close down these stores, that would make sense, right? They don't have as many stores out there, so they're not going to have as many sales. But ultimately, that means they could potentially profit because they're going to have less overhead in holding these brick and mortars. And then that could be offset by having less sales. They don't need as many sales if they don't have to bring in as many dollars every day. So it's estimating somewhere in the 1.15 billion in sales. Now, if BBBY anticipates the closure of, say, 1/3 of the total stores to make them break even by the end of Q4, then we have something to look forward to after the Q4 earnings, because we're going to have an additional 2/3 to 3/4 of store closures that should turn them cash flow positive if their numbers, if their anticipation is working out in the way that they see it. So Q2 of 2023 is going to be very interesting for us. I think that's whenever we're going to get the full picture as to if cutting these brick and mortar stores in some of the higher rent districts or those areas that maybe weren't generating as much income as they would like to see, then we're really going to have a clear picture as to how this turnaround story is actually playing out. What are they doing? How's it working? And are we seeing it in the numbers? Now, the other thing I wanted to talk about was the short thesis. You're going to see a bunch of people online, YouTube, Reddit, whatever your community is that you go to for your information, and they're going to tell you that the shorts are screwed. The shorts are in trouble. The shorts are burning. The shorts aren't burning. Now, I'm just telling you that because we can figure that out here in just a second, right? The estimated short interest percent of the free float, 37.87%, are reported as coming in at 59.21. Both numbers extremely high. Extremely high. Like, we shouldn't see these kind of numbers unless the shorts truly think that they are right. Now, are they right? I don't think they know yet, right? We'll see. We'll see what pans out, whether the company can turn around or the shorts are right. And as of right now, we're just kind of in there speculating on what's going to happen. We're giving a thesis, an opinion on what could happen if it turns around. Is it undervalued at the moment? If it was a profitable turned around company, yeah, absolutely 100% undervalued. If their turnaround plan does not work, then does that make us wrong? Yeah, it would. It would make us wrong. But we can see kind of the conviction in the leadership that they have at the moment. We'll see how all of that transpires, and we'll get to see as the earnings progress whether it is actually turning around and heading in the right direction or not. So I was just looking at some of the highs that we've had in Bed Bath & Beyond, and these are approximate numbers, give or take, dollars or cents. I didn't want to break it down to the penny, but January 15th, January 2015, had a high of $80, and then we saw that pull back to $4. So if you hear people saying the shorts are in trouble, the shorts are screwed, the shorts are burning, they're not burning, guys. Look at the numbers. If you shorted something from $80 to $4, are you burning if it goes to 10, 15, 20, 30? No, you're not. You're not. If you bought at 4 and it ran to 80 and it pulled back 25%, are you holding the bag? No, you're not holding the bag. January of 2021, we had a high of 50. Now, I'm going to tell you why this matters and my thinking and my logic behind it in just a moment. In August of 2022, we saw that run to $30. Now, it's pulled back to $6 to $8 range, give or take. So, looking at it in that perspective, are the shorts burning? That's my question. No, they're not. The math they're not burning. If you bought at 6 and it ran to 30 and it pulled back 50%, are you burning? No, you're not. A 50% pullback would make it $15. You're still $9 in the profit. But why it matters is we're seeing them have to short it down at a lower number to keep it under control, right? From 80, they shorted it down, and then it got a spike back to 50. Now, in order to keep it in line, in check, the shorts have to come back in. They have to either borrow more or they are covering and then replaying those shorts that they have at 50. So it's either changing their average or it's completely revamping their average to the new number. In 2022, we saw it run to 30. So again, the same play. The shorts are either changing their average, right? If they shorted at 80, they shorted at 50, and now they're shorting it at 30. That changes their overall overhead that they would have, their profit margin. It makes it a little bit tighter each time. So whether they swap them all out and they have a true $30 average now, or if they are playing somewhere with, an 80, 50, 30, and they're just continuing to add more because they think their thesis is correct, then that's what we have to consider. But as of right now, the shorts are not burning. You don't have to panic about the shorts covering in the very near future unless there's a catalyst. And that catalyst is going to be that the business turns around. And gammas are not a catalyst because the shorts, they know that it's short-lived, right? You had the spike to 30. It took about a week or so. It calmed down, and they drove it right back down. So does it cost them money to do it? Sure, it does. Does it change their average when they're working it? Yeah, it does. But does it put them in a position just for, a short period of time, 3, 10, 15 days? Does that make them really hurt? It doesn't. It'd be like you having a $10 average and it coming down to 5 for 10 days, and then it runs right back to say 15 or 20. You're happy. You are still good. You didn't change your average at all. You just sat there, you held on. Maybe you bought at 5, which brought your average actually down more, so you're a little bit more profitable. So we play devil's advocate right on this channel. It's not always the most popular opinion, but I'm just telling you the shorts are not burning at this moment. So that's why I keep telling you guys to protect your accounts. The shorts don't care about your shares. They have no worries about what you hold. Ultimately, the market makers will provide the liquidity. They will FTD if they have to. The shorts will buy into the market. They can return those shares. They don't need your shares to be able to say, hey, I covered and here's your shares back. So we do also know that they're doing an offering of a minimum of 12 million. Now I say that because we look through the filings, and if you look back to one of my earlier videos, I said it was a minimum of 12 million shares that are going to be offered into the market. And with earnings, we saw that they have successfully entered 3 million of those 12 million into the market. And this is not really making them a whole lot of money. So I don't fully understand why. I know that Bed Bath & Beyond has done a lot of share buybacks in the past, and it's been a whole lot higher than $9 or $10. But they have bought a considerable amount of shares back at higher values than this. So to offload them at $9 or $10, it's they're kind of losing money. In all honesty, to offer them at that price range. But that's why I'm saying we're going to keep a close eye on that $9 to $10 range, because it seems like that might be the area where they are unloading those shares. So to crack through it, that will be great to see it run through there. But I think it might be a little bit of a hiccup in the meantime. Now, with the overall markets coming down, the broad scheme of things, everything we're looking at on a daily basis, it's impacting almost every security out there. You're not finding very many securities that are trending green whenever every market is coming down. So that is hurting us just a little bit as well in this meantime. So that's why I keep saying, protect your accounts for the meantime, and we will see when that strength comes in. We're going to continue to talk about it. We're going to continue to focus on it. But if you're playing options in the short term, we talked about the RSI. Make sure the RSI is cooking at least 50 or above, and you want to see that so that you're moving in the right direction. If you're playing longer dated leaps or options, I don't know if a month, 2 month, 3 months is going to do it, because we are looking into February of 2023 before we see those store closures that actually go into effect, and we see how the numbers start appearing on the books. Now, whenever the shorts start seeing those numbers on the books and they start asking their questions and they see the guidance and they see what's going on, that's whenever the shorts are going to start thinking, maybe they aren't going to go out of business, right? But until that time, until they see it, until they can see it for their own eyes and make a logical decision, they're probably going to stay as convicted in their thesis as the longs are in their thesis. And the last thing I wanted to touch on was kind of the whole diamond handing thing. As of right now, I'm telling you that they don't care about your shares. The shorts don't care about your shares. You're not necessarily locking up the float. Most of your orders are probably going to the dark pool anyway. But if you have a comfortable average, I understand. I'm just saying we don't know where the true bottom's going to be, probably for several more months. Now, we might see some runs in the meantime, because I think the overall markets they got to have the ebbs and flows. They got to buy back into the market to have more to sell off, get a little bit of that profit, let retail run it up, stick retail with the bag type of game, and you let them think they're getting a deal, and then, they drop it on its head again. So do I think we're going to probably see some runs and some drops along the way until we get there? I do. I think it's just going to take a little bit of time, and that's why I want everybody that's watching this channel at least to maybe put a little bit of thought into what I'm saying. Whenever I'm saying keep your account green, don't let the trade go against you right now. There's no reason. There's halts, right? There's always halts whenever things get crazy. So you don't have to get every penny to be able to fully capitalize on a move. And the further your trade gets against you, the less it makes sense, right? If you have to run 50, 80% from where your account is, then it wipes out a lot of your profits that you could be taking if you're just watching them in the meantime. Now, I think the good thing about everything is you have a couple of good communities that have probably come in here along with some of the other communities, or at least eyes on the play. You got a lot of the GameStop that came in because of Ryan Cohen. Now, some of them are going to follow the man, and whenever he left, they will leave. But some of them actually follow the play, and they're going to stick with it. I think you got a lot of the diamond hand sense about from the AMC community as well that probably came in here, and whether they're diamond handing or not, I don't know. You know, it's one of those things that, hey, at least they are tying up shares. But if you're watching this channel, that's not what we're talking about right now. We are strictly about preserving your account, protecting your account, and making money whenever the time comes, whenever that time is right. So if you're looking at longer dated options, just keep in mind, I don't think, you know, if you're buying January's or December's, I don't think that's enough time as of right now if you want to truly see into a short squeeze. I think you could capitalize on some gamma in the meantime, maybe. Yeah, there's a strong possibility about that, but I would be watching them and consider, you know, always rolling them. Don't let them go against you either if you get that gamma in the meantime. We just need a little bit of time on here. We're going to see how the community's responding. We're going to see how the price action goes. We're going to see what the company does with the fundamentals. And we'll keep an eye on how the overall sentiment and interest is among any investors that are coming in. I don't care if you buy or sell. It doesn't matter to me. I don't care if you want a diamond hand. It doesn't matter to me. We are just talking about logical facts, things that we're going to be looking for in this play along the road. And like I said, I like the stock. Anytime I'm telling you it's coming down, or we're talking about lower or account protection, it's not because I don't like it. It's not because I don't believe in it. It's because you guys are coming back and watching it, and I just don't want you, I don't want anybody saying, look, you told me that I should hold this thing. I've never told you to hold it. I will never tell you to hold it. I will just tell you I like it. I think it has potential, but I personally will not really let it go against me at this time either. I always look for that strength. I want to see where it comes in, and then I want to see how some of the fundamentals play out, because that's what's going to be your true short squeeze in Bed Bath & Beyond. If you want a gamma squeeze, I think we can get gamma squeezes all day. We can look into the options chain and figure out where that setup is. And, you know, whenever you're seeing the RSI pumping above 50, then, you know, you're probably going to be able to profit a little bit on those call options. And up until then, we are just going to kind of kick back and see what happens. But give it time. You know, it's one of those things that are going to take time. So we're going to watch the trends. We're going to watch the channels, and we will take it from there. But I appreciate you guys coming back and watching another one. I hope this made a little bit of sense to you. If there's anything that I can clear up, don't hesitate to drop it in the comments. I will 100% try to follow up on it or see if I can find an answer for it. But I like the situation. It's not out of the woods. It's not 100% guaranteed. None of this is. Nothing is in the stock market. But we just kind of watch and see what happens, and see if we found a diamond in the rough, or if it's going to fall flat. There's only two Two real scenarios that work out in the end. So thank you guys for coming back and watching another one. I hope you're having a great weekend. I will catch you in the next one. As always, stay golden, people, and may your accounts stay green.